Okay, we'll take a look at recording another disposal. Practice one, S10-13. Try on your own. It's a pretty easy one, and we'll have more complicated ones later. So here it says that Alpha Communication purchased equipment on January 1st, 2020 for $27,500. Suppose that Alpha sold the equipment for $20,000 on December 31st, 2022. Accumulated amortization at December 31st, 2022 was $10,000. Journalize the sale of the equipment. So in this case, our step one is figuring out the accumulated amortization and deciding if it's up to date. If it's not, we need to book something else. So here, they've actually told us that our accumulated amortization was $10,000. And that was at December 31st, and that's when we sold it. So that was telling us it's already up to date. We don't need to book anything else. So, as I said, this one's pretty easy. Step one is already done. Step two, we want to figure out the book value of the asset. And this is cost minus accumulated. Our cost here, $27,500 minus the $10,000 accumulated, and that equals $17,500. Okay, so we've got our book value. Step three is to calculate the gain or the loss. And this is equal to the proceeds minus our book value. And our proceeds here, it says that we sold it for $20,000 minus the $17,500 book value we just calculated. So the amount that we get here is a positive $2,500. So since we're selling it for more than we have as a value on our books, and we get this positive, it is a gain. So now step four is actually to record the entry. So on December 31st, 2022, well, we know we need to get rid of the accumulated amortization and the value of that equipment. So we're going to debit accumulated amortization for equipment. Still running out of room. And we calculated that amount as $10,000. That's our step one, or we didn't calculate it. We were told that. So we're going to debit the $10,000. Next, we credit the equipment. So whatever we're selling, here it was equipment, and we're using the cost. And the cost of this equipment was $27,500. Then we book what our proceeds were. What did we receive as the sale? And we sold it for $20,000. So we got cash. So we'll debit cash for $20,000. And we know the last piece is this gain that we need to book. And a gain is a credit because it's like revenue. It's something good, so that's a credit on the income statement. So a credit, we're going to record gain on disposal of PP&E. And the amount here, $2,500. So we've got all of our pieces. As I said, it's always good to double check. Total debits are $30,000. Our total credits are also $30,000. So it looks like we've done this properly. Okay, so that's, again, a fairly simple one. We didn't have to do a lot of work. We were just given step one, whereas you may see them more complicated, and we will look at that in our live video, or our live class, I should say.